Welcome back, traders. In this video, we are going to break down a complete smart money concept trade using the 30 minutes time frame. I will take you through every step, from identifying the first break of structure, confirming the market structure shift, and understanding how the fair value gap and order block combine to form a powerful confluence zone. Then, we will study inducement, locate the sell-side liquidity target, and finally, show how to enter the sell trade from the premium pricing area all the way down to the liquidity objective. This is a full institutional style breakdown, so stay with me till the end. Let's begin. As we begin analyzing the market, the first thing we identify is a clear break of structure. Price had been moving upward, creating higher highs and higher lows, but eventually we saw the market break below a previous significant low. This break of structure confirms that the bullish momentum has weakened and sellers are now beginning to take control. Whenever the market breaks a key structural level, it is the first strong clue that a potential reversal or deeper correction is unfolding. This early shift sets the foundation for everything we will analyze next. After the break of structure, the market continues to show weakness and forms what we call a market structure shift. A market structure shift occurs when price transitions from forming higher highs to forming lower highs and lower lows. This shift tells us that the previous trend has officially changed. We are no longer in a bullish environment. Now, we are in a bearish environment. This transition is crucial because smart money concepts always emphasize trading with the new dominant structure, not against it. Once the bearish shift is confirmed, the next key element appears, a fair value gap. A fair value gap forms when price moves rapidly in one direction, leaving behind an imbalance, an area where the buy and sell sides did not properly transact. This imbalance becomes a magnet that price often revisits before continuing its direction. In our chart, the fair value gap forms exactly after the market structure shift, which strengthens the bearish narrative. The fair value gap becomes our first area of interest because smart money frequently returns to these inefficiencies to rebalance price before taking the next move. Inside this same region, we also have a clearly defined order block. An order block is the final bullish candle before the strong bearish move that caused the break of structure. This candle represents institutional orders, banks and smart money positioning themselves. When price returns to an order block after a break of structure, it often reacts strongly because the institutions defend their positions. In our setup, the order block aligns beautifully with the fair value gap, creating a powerful confluence zone. This gives us even stronger confidence that this area will generate a bearish reaction. Before price enters the order block and fair value gap, notice how it first captures a small pool of liquidity above recent highs. This is known as inducement. Inducement occurs when the market entices retail traders into entering positions too early, either buying breakouts or prematurely selling pullbacks. Smart money uses inducement to build liquidity, which they later use to fuel their true move. Seeing inducement right before price taps into the fair value gap and order block adds another layer of confirmation that the downward move is about to continue. Next, we identify the target, sell-side liquidity resting below previous lows. Sell-side liquidity forms when the market leaves equal lows, clean lows, or obvious swing points where retail traders tend to place their stop losses. Smart money will always push price toward liquidity pools because that's where they get the best fill for their orders. So once we have inducement above and sell-side liquidity below, the direction becomes very clear. The liquidity resting beneath those lows becomes our logical take-profit zone. Now the final step. Price retraces into the fair value gap and taps the order block. This is the premium area where smart money sells from. We enter the sell trade here and allow the market to continue downward. The market follows the bearish order flow and eventually hits the sell-side liquidity target exactly as expected. This completes the entire smart money sequence. This setup shows how powerful smart money concepts can be when applied correctly. You don't need 10 indicators. You only need to understand where smart money buys and where it is targeting liquidity. If you want to see more trades broken down exactly like this, smash the like button, subscribe, and comment which chart I should analyze next. And remember,